Blessings in abundance. And we are here for yet another installment of, here we go, it's been a while. We back at it, the day trading course. Yes, people, we back at the day trading course. Let's get to work. Thank you all for your patience. It's time to cook. It's time to cook. So, first of all, everything is back up and running. Get ready for that real estate class, how to make money off of real estate, UCC real estate course. We're not done with that. We got to still go through a thorough explanation of how to use cryptocurrency to embark upon the acquisition of real estate or make a profit of it. Wow. We're going to also learn how to use cryptocurrency to grow our portfolio. So that's the Forex Trading Cryptocurrency course that you see to the right-hand side of the screen. And then to the left-hand side of the screen, you see the UCC and real estate course promotion. There's still a whole lot of money to be made. And I love being the one to share that information with you. I want you guys focusing on, if not the real estate package with the books, but pennies off of millionaires, all orders are out. Yet again, we're back up and running. Blessings in abundance. Feels good to be back. Thank you all. Get your In the Money text. This is extremely important. So for this particular course, if not for no other, I always said, get in the Money text ahead of time. Get inside of that In the Money text ahead of time. Click on the word membership on the site and purchase. Get on that In the Money text. I say this all the time. Why? Because right now, more than ever before, you're going to need it, because now I'm getting more technical, because a lot of you have built your level of understanding to the highest level, walking with us. But even if you're new and this is your first course, you're going to learn. Take your time, because I make sure I teach at all levels. Today's class is not going to be super saturated with data, primarily because I want you to get an understanding of what direction we're going to go in when we start sending these texts. You will need the text in order to operate properly. In order to get that assistance you need, you can just take the class and do your thing. But I've constructed the day trading course in such a way that you will need the In the Money text, because it'll give you enough assistance, and eventually you'll be on your way. Eventually we can take the training wheels off and you can just go. You guys know what I did. I should have did it in this course, but I'm gonna show it next week then. The monies that was made. Because when I say, hey, it's time to make some money, I show you. I could turn the button off and on. But things are seasonal. When we're back in the season of making money, I need you guys to understand how the In the Money text works, because people want something every day and they want 10, 12, 15 different notifications. I don't operate like that. The reason why I have the track record that I have with the In the Money text, because I'm only sharing things that I do, things that I'm interested in. Remember, I'm a high school dropout. I'm not credentialed. You know, I don't have no licensing and all this. So all I do is share what I know, share my conceptions, share my reservations, share my strategies, share my personal experience, share for educational purposes. That's what I do. That's what I do. Not bad for a 10th grade dropout. I don't say so myself. That's probably my greatest credentials that I dropped out of 10th grade, because of the paradox that it represents on account of my level of success. Get your In the Money text. How many texts do you get from friends and family that you can say actually made you money? When Brother Polite sends you a personal text, you will smile to yourself, because he is letting you know where and how to get to the money. Join our membership for real estate, cryptocurrency, Forex, and stock notifications, brotherpolite.com. Click membership, In the Money text. You need this more now than ever before. So join membership, get your In the Money text. Make sure you're here. If you don't got gold in the crisis, you need to get over there. You don't got BP contract killers, you need to get over there. But especially for this day trading course, you need the In the Money text, because day trading is so technical. Day trading is so technical. I don't want to be sending you large paragraphs that you got to sift through when time is of the essence. When you get that telegram message, you need to go, you need to shoot, you need to fire. Real talk. Real talk. So welcome to the day trading course. I taught them how to buy $1 with a few pennies. We here. First thing I need you to take into account is abbreviations and phrases. I need you to get into the verbiage. You know, next week we'll do some nomenclature. We'll get into the nomenclature more. But right now, I need you to get into the abbreviations and to the phrases. I want you to get an understanding of the word gap, or pay attention to this terminology. This is essential to your ability to process the data or the correspondences that we send out. So we're going to talk about gap. We're going to talk about haircut. We're going to talk about TF, time frame. I want you guys to make sure you process, look out for these things during this course. But today's session is just to really make sure we get everybody on the same page. Some things will be mildly reviewed, but I need to introduce you guys to these things. So then when I send out a text, people are not like, yo, what the hell is going on here? I'm lost. I don't want the text to intimidate you. So this last week, some people were a bit intimidated. Most people were. Some of that I did a little bit on purpose, just to show you where we're going so you can highly anticipate class today. Gap, haircut, TF, time frame. You see TF in your text, just means time frame. I'll let you know what I mean by time frame. Haircut, I'll let you know what I mean by haircut. Gap, we're gonna let you know what I mean by gap. So don't worry about any of these things. Just understand that information is coming. You will be in the know. So here was the naked price action. We went over this the last time. It's in the course. It's just naked. We don't got no time on here. We don't got no line going across here. There's no indicators here. Okay, so it's just naked price action. But we're going to keep reviewing this over and over. We're going to add data to it gradually. Nothing intense. Well, I want to make sure that you get a grasp of what's going on here. Because the ultimate goal is to make sure you know how to use those texts in real time. Because when we day trading, I can just give you the data for day trading. You know, you go online, you see people breaking down, oh, the things that you need to do when it comes to day trading. This is what they say and this is what they do. But they really don't get technical. I'm so technical, I'm sending out text messages on the day trade level. But the type of messages I'm sending out for day trading is very meticulous. Because I will be using these terminologies like gap, haircut, time frame, and a whole lot more. We'll build our way up there. But this is just to make sure you get the gist. We got to be able to build with each other in real time and consolidate that data somehow so you don't be there reading whole paragraphs at a time and then, oh man, I missed the trade. Doesn't necessarily mean everything is going to be in that kind of time frame. Like, damn, if I read this too long, boom. I don't want you to become impulsive traders. We talked about that before on many of occasions. Nonetheless, time is of the essence. And I don't want you perplexed by the correspondence and your inability to read it or make an assessment about what just was sent to you. I don't want you jumping out the window. Oh, I think I understand. Oh, apparently I didn't. But what I'm saying to you is the way that I'm sending my notifications, if you've ever been on somebody's text list, you'll never see it broken down the way that I'm sending it broken down. That's a fact. You'll never see that technical data because I'm here. Not only, I definitely want you to win. Anyone can say, hey, day trade this right here, boom, and don't give you enough technical data to tell you kind of what to look for. And you'll understand what I'm saying. So I want you guys to be able to appreciate what I'm bringing to the table because I clearly want you to win. And this is not like the other long plays we do. This is the, oh man, we moving in a shorter increment of time. So because I know you're moving in a shorter increment of time, not only is it good to get the we got to understand some of the formalities, the nuances, right? But I don't just want you to have a standardized approach towards day trading and all the fundamental things that people regurgitate online. I want you to get so damn technical that your confidence is all the way up here. That it's like after a while, yo, I got this. After a while, you don't need all these abbreviations because you know what to look for. Right now, I'm putting those in the text so you eventually can grow into understanding what to look for. When you're paper trading, whatever. Why not? So we added a line. You notice the line is here. Okay, so this is for those of you that may not know for whatever reason, because you didn't take the other classes, fine. Those of you that may have forgot, fine. This is your support resistance line. So when you see the candlesticks looking like it's going up here, this is called a wick. This little thin part of the candlestick is called the wick. This is the candlestick and this is the wick. I like candlesticks. And when you see it hitting this line, and then things are going down and it's attempting to go up again, but it's going down. That's called resistance. Under the line and the endeavor to get above, but failing each time, that's called resistance. The support is up here. This is support. So when you see it here, it's going down, but we got support, it goes back up. Boom. Then we wind up dealing with resistance, hoping that it goes back up. We see this thing resisting. Okay, so I just wanted to use this naked chart, add something to the naked chart, naked price action chart. So you get a vibe. Okay, let's get another vibe. So we got the minute chart, the hour chart, 15-minute chart, 1 month chart. And this is important to day trading because the way I'm going to teach you to day trade, you're going to always need to use more than one chart. You want to trade by the minute, you're going to need to use another chart. You want to trade by the hour, you're going to need to use more than just the hour chart. That's how I teach. You need a point of reference. And you'll understand what I mean by referencing. You'll get it. So, what I need you to understand right now, which is of huge expedience for those that you may not know. I put 5 minutes here. This arrow represents 5 minutes. By the time we get to this candle, we're 5 minutes in. On a 1 minute chart, this would equal this first line to the left, starting left, going right. First candle, second candle, third candle, fourth candle, the fifth candle that this blue line is pointing at. So we got 5 candles, you got 5 minutes. If it was an hour chart, then each candle would equal an hour. You got 5 candles, you got 5 hours. It was a day chart, you got 5 candles. Those 5 candles equal 5 days. Any candle after that, 6 day, or the 6 hour, or the 6 minute, so forth and so on. If it's a 1 month chart, every candle equals a month. I hope you understand what I'm saying. So you got to be able to understand, if you're in a minute chart, each candle represents a minute. If you're in an hour chart, every candle represents an hour. 15-minute chart, every candle represents 15 minutes, so every 4 candles equals an hour. Walking with me? So we started out from scratch, naked price action chart, put up a line there representing resistance and support. We move forward and we want to identify the fact that we need to be trading on some kind of time. Are we on the minute chart? Are we on the 15-minute chart? Are we on the hour chart? So forth and so on. Now, what I also want you to know is, if I'm trading on a minute chart, which is what I'm gonna have you guys trading off of, if I have you trading on a minute chart, I want you to study the 1 hour chart. You understand what I'm saying? If I have you trading on the hour chart, I may possibly have you studying on a 1 month chart. Because if we're trading by the minute, we get a look into the future by studying by the hour. And we get an idea about the Fibonacci energy, or we get an idea about recurring themes that we can't see so clear on a minuscule level. So we stretch it out. The details are in the minutes, but then we're trading by the minutes. So those details are good when time passes. But if we need these details in real time, we go into the future and we see what the hour chart reads, and we look at that in retrospect, and we start trading by the minute because we see what it looks like in 1 hour. We see what it looks like in 2 hours. And these hours are made up of 60 minutes. So we get a look at 60 different things, 120 different things, 180 different things if it's 3 hours that pass. And now we got to read for the gaps. If there's a gap up or a gap down, we're looking for the gaps when we day trading, but what exactly is a gap? So this is a look of how a text of mine will come to you. A text of mine will look like this. TCEHY. This is a security. This is how a text will look. And I might write gaps at $57.22. Right? You see it going down. You can gap down or you can gap up. Gaps at $57.22 and $53.77. All right. Then BK is back and off. It's had a 40% haircut from its 52-week $99.40 high. Now I said something like this, and y'all gonna freak the freak out. Rightfully so. I want to be able to send stuff like this. And I may put TF there, right? And TF will be time frame. So TF will represent, I have TF 1 minute. I might have TF 5-minute chart, TF 15 minute, TF 30 minute, TF 1 hour. So if you see TF, you know I'm talking in a certain time frame. Don't let none of this disturb you, because I'm gonna go through this in thorough fashion in classes to come. I just need you guys to understand where we're taking this. Because these texts gotta be on point. So remember, a lot of you didn't even know how to read charts when this all started. You never thought you would be able to. You never thought you'd be able to understand it. And now you guys are, people walk by your computer or your phone and they're like, what the hell are you doing? They're literally like wondering, what are you doing? So in that same instance, this is one of those, what the heck are we doing? So you got the note, which would normally be accustomed by a TF for time frame. And then I'll speak in reference to the gaps. You might see things like back up and off. You might see terminology like haircut. And this means this is a lot of data inside of one notification. So I could just send you notifications. Hey, invest in this, invest in that. You know, I don't tell you what to invest in, but I tell you what I'm investing, right? But I could just have it like, Brother Polite likes to invest, or Brother Polite is spending his money, or Brother Polite is day trading the following securities or the following underlyings, because that TCEHY is an underlying or a stock, right? Security. And that's where people end the whole game. They just give you the names of companies and see you later. Give you the name of some companies and they be like, peace. And they just leave you out there. To the contrary, you're going to get data from us and you're going to be like, whoa, okay. A whole lot of information right here. That if you're not in class, you wouldn't know what to do with this. There'd be $1 million right in front of your face and you wouldn't know it. So you guys got to learn code. You guys got to learn code. You got to get in tune with this information. It's funny because I always had a joke about this tech guy that always thought he was fooling us by saying, you know, he would say code every time he was lying about something. You know, it's code. I got to do code. And in this particular instance, the inside joke, but in this particular instance, and if you know, you're laughing right now. But you got to get in tune. You got to get in tune. So this is what I want to show you guys. It's going to be looking like this when I send it out now. We're going to get to this point where you're going to see this. It's going to be just like when people walk by looking at your computer. They ain't going to be looking at your text. Just leave that mother alone. Leave him alone. Leave her alone. She a beast. You will get this. You need to know this. The more you know this, the easier it is for you to make your money. I did the baby thing and just send you the name of the stocks and securities and everything. But we day traded, we got to take it to another level. I just want you guys to understand that. We got to take it to the next level. We day traded. What is meant by gap? Gaps are areas on a chart where the price of a stock or another financial instrument. Let's do it again. What is meant by gap? Gaps are areas on a chart where the price of the stock or another financial instrument moves sharply up or down with little or no trading in between. As a result, the assets chart shows a gap in the normal price pattern. Gaps are extremely important to day trading people. Okay. So we got something, we say something's trading horizontal. There's some activity there. And it's not going up or down. It's not oscillating like that. It's kind of going across. When we say gap, right? We talking about that sharp, that acuteness, that, yo, nothing was going on and boom, we skyrocketed or we plummeted. So this is an example of a gap. We've seen this now. Gap up or gap down has to be of significance. Not by a penny. More around 10 cents if we day trading on a minute chart. Remember, we taught about the understanding and experience of realizing how important a penny is. I taught them how to buy a dollar with a few pennies. Remember that? And we're shipping the book out again, so don't worry. So a gap wouldn't be represented by a penny or two. We'll see a nice percentage. But we see a 10-cent spike. We can appreciate that. 20 cents, 30 cents, 40 cents, definitely could appreciate that. Especially depending on the amount of money you put up. So presumption is no matter what money we putting up to day trade, 10 cents is pretty much always valuable for us. Because it represents 1/10 of every dollar that we're trading. We'll get into the philosophy and understanding of this so we know we're not wasting your time. Because you got to have a strategy. You don't have a strategy, it gives rise to emotions, and these emotions thrust you into being an impulsive trader, which you don't want. Different slide. Watch this. Then back and off, it will head back up. That's what that means. So you see this BK and up and off, then we understand that we are expecting this thing to shoot right back on up. So we understand the decline, right? So this thing went from 57.22 and downwards to 53.77. So this would mean that this would be around our point of resistance. So we know this is where the resistance is, or where support begins. We would know anything 53.77 and higher is worthy of our interest, is worthy of our attention. So when you see something like this, and I say the gap, and I say, man, the gap up is 57. The gap down is 53.77. If you see the gap down is 53.77, and I say back and off, back up and off, then you know from 53.77, your anticipation is $4 and change rise in or around by studying the gap. So what I'm saying right here is once you hit around $53.77, even 52, you can always scale it back a little. But once you get around that area, you can enter. And you can prepare your exit inside of $4. You can stay at your discretion from what you see and what you feel. But I'm being so technical, I'm giving you zones. I'm giving you accountability. People just give you, hey, here's some letters you should invest in. Here's some letters that's out there. I'm being technical. I'm so deep. I'm like, yo, there's $4 here for us. How many 53s do you got? You got 10 of those? So we can make 40, trade, get out of there, and do it again over and over. Well, I made just 200 for the day. I made $1.20 for the day. It's not always gonna be $53. Sometimes it might be an $8 stock, $6 stock, $5 stock, penny stock, under 5. So we look at this in retrospect to the 52-week high, which is $99.40, in case we want to trade beyond the 1-minute mark and go a little longer. And I want to trade month to month. You see, and this is important because when I start showing you how to day trade option contracts, the goal is going to be to trade long on an option contract by a year out. I haven't even discussed this with the options trading family that's in that course. I yet to discuss that. It's a whole different strategy. We talk about it, but we haven't employed it. That's where the money's at. But I want you going in with a day trading mind. I want you going in with a day trading mind. When you go long, paradoxically enough, for options trading, when you're selling contracts. I need you guys to get in my state of mind. Because all this is about is what goes on in my mind. This is what Brother Polite does. You have a point of reference for what I do. That's it. So in retrospect to the 52-week high, we know that that's a haircut. Look at that. That shit's at 40%. We calling that a haircut. There's so much difference between $53 and $99 that if we were trading and going long, we know eventually we have to hit profit eventually. So why wouldn't we get an option contract? Those of you that don't know what that is, don't worry about it. You go to the options trading course and you'll find out more about it in classes to come because I'm going to give you alternative approaches. If I'm day trading something that's at $53 with a 52-week high of $99.40, very likely we may not get to $99.40, but we will get to $60.70 eventually. So that's when you know to go long. You could be day trading a security so long that you finish milking it on a day trade. You're like, yo, there's some more money here for me, but I got to switch the angle on how I'm approaching it. Now I got to start swing trading. Then your swing trading turns to options trading. So I'm gonna show you how to finesse the day trading, leverage what you've learned from day trading and underlying, and saying I'm a swing trade, leverage what you learned from swing trading with all this data you've accumulated, because now you're getting into an intimate relationship with the security. Number two, just go long. We throwing the football, go long. Eventually, you're going to be right. When we look at that haircut, when we look at the difference between what it's trading for now, 40% haircut, 50% haircut, 70%, 80% Zeke. Someone's pushing your shit back. When we talk about that haircut, we just talking about the significant difference between what a thing is trading for now and what it would potentially trade for in the future. The likelihood. And we looking at this in retrospect. We saying, okay, the 52-week thing is here. Okay, I'm trading here. I'm moving on the minute chart. I'm moving on the 5-minute chart, but I see something here. And shit, we could be busting our gun at all cylinders. We could be day trading, swing trading, and options trading all at the same damn time. Making money at different points in existence. Don't worry if you still don't understand all this data here. If you're just getting the gist of it, that's okay. Because I'm going to make all of this clear. And I got more to come. So I didn't want to saturate this with a whole bunch of abbreviations and signals and technical terms. I just want to show you where we're heading with this, because we're going somewhere with this, and it's going to get crazy. Because people was making money without the technical details when I send it. This day trading thing is serious. We're going to make money by the day, not by the week, which we will do too. But it's going to be springboarded from day trading. You think you was trading before? Wait till you start mastering day trading. And oh yeah, what we have to discuss next week, I shouldn't even bring it up. What we have to talk about pre-market. We have to talk about after hours. Because the money is made in pre-market. And if you're living in the West Coast, goddamn, it's going to be rough because you're going to have to be awake 2:30, 3 a.m. But you can make a whole lot of money before the market even opens on the pre-market. In fact, I would tell you, most of your money from day trading, using the strategies I'm putting forth, you can kill them on a pre-market in 15 minutes before close. Then aftermarket, then the first 15 minutes of open. In that order. And I'll break it down next week. Pre-market and 15 minutes before closing. Pre-market and 15 minutes before closing. Market closed at 4 o'clock on the East Coast, 1 o'clock over here, Pacific Standard Time. Before the market opens and 15 minutes before closing. You'll be rich beyond imagination. Word to everything I love. I'm back in my bag, people. Make sure you're in these classes. It's about to be crazy right now. Trust me. So here's an example of the same security we were looking at. Notice where the gap up is. I put the gap up. See the spike? Boom. I'll show you a gap inception, $57.44. The market is closed. See? Friday, 27. I'm actually looking at a real chart from real time, 27 August. So the market closed at 57.44, and look at the gap inception. Look at these dotted lines. We're going into the after hours now. So we're going to look at this at 57.44. We say, oh shit, it's closing, but after hours has a gap. So we can look at this gap, we can study after hours, and we can have a level of anticipation. Because gap up means a gap down eventually, and gap down means a gap up eventually. So we got to look at support and resistance and see what the recurring themes or prices are. That's when we're going to use the Fibonacci time zone that I taught you about in the previous classes. We're going to look at the Fibonacci time zone. Yes, that's where that comes into play. And we're going to look at these gaps, and we're going to have a level of anticipation. And that's why I'm able to say between $57.22, gap down, and then you see the gap up at 53.77. So I know, or pardon me, you see $57.22 gap up, and you see the 53.77 gap down, where I'm able to say there's a $4 space for us there. It could go higher and it could go lower, but I know in between there, we're going to eat because we're studying this thing. We're looking at it. This is a language. Once you master the language, it's talking to you. It's snitching. It's telling all the secrets. Fibonacci tells all the secrets. Anytime you deal with time, time tells. Time will tell us what they say. Time is the greatest snitch. Facts. This is a 1 hour chart, man. Go in the upper left-hand corner. Go in the upper left-hand corner, you'll realize that this is a 1 hour chart. So we see on a 1 hour chart, the closing for the day is at 57.44, and we see the gap. We see the dotted lines going into the after hours on a 1 hour chart. Now look at the 1 minute chart. Look what took place in after hours on the 1 minute chart. It went as high as $59. You know what I'm saying? 25 cents. We see that gap up after hours. We see it at 58.96 over here. See, this says 13 military time, minus it by 12, 1 o'clock. 1 o'clock Pacific Standard. At 3 hours when you go to East, 4 o'clock, the market's closed. Just to get a fix on the time. This is a 1 minute chart, so every candle equals 1 minute. Open at 58, high at 58.96, low at 58.92, close at 58.96. Watch what happens. So we know, watching this, we know the threshold means what? It was at 58.96 on the 1 minute chart. It's at 57.44 on the 1 hour chart. We would know based on the hour chart, there was a crevice of space to get to the 58. But even more concerning, we know that this thing has to go down pre-market first before it shoots up. Because we know our threshold, because we discussed the threshold over here. 53.77 to 57.22. We used the 1 hour chart so we can gauge. This is the 1 hour chart, so we can gauge the 1 minute chart. Don't worry, I'm gonna explain this even better in weeks to come. We got to learn about pre-market and after hours. We got to really get into that because the money is in the pre-market and the study is in the after hours. It's a whole strategy. People got different strategies. Most people's strategies is regurgitate whatever they can Google and download. This is something different. And look at this. The 52-week high, the 40% haircut I was talking about, $99.40. We talking about the same stock, just more data. We always collecting data. So what we can expect when the market opens up for TCEHY, pre-market, we're gonna see it go down. And we would know in pre-market on Monday, when we see it going down, we're gonna look for that, let's call it, we're gonna look for that resistance support line. And when we get to the $53 range, we know, oh, it's gonna bounce back up. The only thing that could change things, of course, is news, fanfare, propaganda, hype. That doesn't take place. Gotta understand, more people are gonna eat in a pre-market because most people are not gonna get up that early to trade. So there's more money for you. There's more to leverage. And I know it sounds weird because you're like, yo, less people, more money. Huh? I thought it was more people, more money. The volatility is different. The volatility is different. We got to talk about all these different things. So yeah, I want us to trade and I'm gonna send out the text so we can eat. Because I always make sure I don't have y'all sitting there laying and wait to eat. But this is more technical because I want you guys to get this thing right. But again, I help you guys out with the text by sharing what I'm doing. But you guys will eat. And when you get this, everything's a breeze. I'm so meticulous. This is going to be an intense course. I get it. But everything will be a breeze after this. Just walk with me and take your time with me with this. That's why I didn't load this damn thing up with slides. Because my mind be going and I be wanting to do some work. And I'm like, yo, hold, chill out. Everybody don't know this. That's not even ego talking. It's like I have an approach towards doing it. So if I'm going to be successful in my endeavor in teaching this approach, this has to be acquired through time and practice and study. So this is light compared to what we're going to be doing. This is very light. But once you keep being familiarized, seeing these things in 1 minute and 1 hour charts, and okay, look at that in retrospect, bring it back, gap up, gap down. It's really the new terms that can throw you off. So you process the terms and you know how to appropriate the terms. You know, you have meaning to those terms. You have images that correlate with them. You'll get this. Gap after hours, look at that, 59. We expect this thing to go down. Boom. Once it start heading down to $53 on Monday a.m. at the pre-market, I know there's some money there. Sitting at this point, when we retest it, we might be at a bigger threshold than $4 and change. We might be at a $6, $7 and change threshold. But where are we going to get that data from? We can go to 1 hour chart for that. So the gap must close. We'll be all right. We'll be all right. So get your in the money text. Y'all already know what the name of the game is. You damn sure need it. Don't lie to yourself. People get in the text. Oh, what that mean? Go to class, family. Get in class. You're going to need it. Blessings in abundance. And of course, you know, the road to 100 grand, if you want to get that CRM, that credit restoration, microwave, personal loan, business loan, credit card needs, raising your credit score, we got you. Or a type of loan that can give you access to 100 grand or more. Normally just entails you just have to have 620 or more credit score and 2 years of business history. Either one of the two, you can email Ms. Savage. We're back on board. We get into it again. We had a change in administration. Okay, we had a change in administration. We're substituting John and putting some other people in place because John is just bugging. So we got a change in administration. And we'll keep it going. Y'all can read the details. Y'all know the fine print. There is no fine print. Y'all know what it is. Y'all read the large print. Let's get to it. Blessings in abundance. I'm looking forward to the next day trading class. See you guys in the UCC and real estate course. Get that if you ain't got it. UCC and cryptocurrency course. Get that if you ain't got it. Catch up, start studying, because we're fully loaded once again. Blessings in abundance. We say, Black Power, Aswid Gador. We say, peace and blessings, Hotep Wild Bottle Cat. And we also say, perpetual success, Iluvu, in our language, Ndu Asusu, the living language.